Hi there, my name is Ashley Mitchikay. I'm the CEO of True North Retirement Advisors. And today what I wanted to do in this video is a little bit different. I wanted to go over your quarterly performance report with you and just spend some time running through it page by page so that when you receive this every quarter, it's valuable. You understand what you're looking at. There is some jargon in this report, and so I'm going to explain, hopefully in plain English, what the terminology means, and just show you how you might want to read this, how you might want to look through it, so that when you do receive it, it's valuable, it's relevant, and it's not something that heads straight for the trash. So I'm going to go ahead and share my screen with you so you can see a sample report that I've ran. Now some of the dates on this are going to be different, but hopefully you can see this, and if you can't see the numbers or the details here, try maximizing the video on your screen and you should be able to see all of the figures and numbers pretty clearly. So on this first page, it's just a cover page of your report, and it's the quarterly performance report. So you get your monthly statements from Schwab, but Schwab is not tracking the performance, and we need a way to do that. And so we use software called Black Diamond to do that. It's industry-leading software, and so they're running all these calculations on the back end, keeping track of all your dividends and everything, and then we are customizing this report to be relevant and useful for you. So it's not meant to replace your Schwab statements, but instead to give you a bit of a higher level, 30,000 foot view of your portfolio without all the crazy details and line items that you see on your Schwab statement. Okay, so first of all, what you'll notice about this page is that you have your accounts here listed. Now this household only has 3 accounts, and Smith IRA, and then 2 test accounts that we have not named. So these should be ranked in order from largest balance to smallest balance. And so if you're wondering why the accounts in your portfolio are ranked the way that they are, that is why. All right, so moving on to this first page here of the actual report. Now this is just our commentary page. So on every single page, it's going to have the title here at the top, and so you kind of know what you're looking at. And every quarter is going to have this commentary here. So a lot of financial firms will borrow content and just copy and paste from their corporate headquarters, or they might subscribe to a newsletter or a source like that, and they'll just copy and paste and put that in there. However, what's a little bit unique about True North and what Dave has been doing for the last 25 plus years is writing his own commentary. So he's the one who's putting this commentary together, and why it's important and why we wanted to include it is that when you're reading your report, it's really helpful to have an understanding for what happened in the markets and the economy over that time period that might be driving your performance, good or bad. So that's why we include this commentary in the report, and why it's a good idea to read through this before you get into your actual report, so you have an understanding and some context as to what happened and why that was. So the first page of the actual report here, you can see it's portfolio overview. This is your entire household report. So the first thing I want to direct your attention to is the allocation over here. So this is always going to be a snapshot as of a date, specific date. So this report's as of 3/17, but actually your report should show 6/30/2018 right here. But the asset allocation as of this date in this portfolio is 54% in equities, 39% in fixed income, a little bit in alternatives, and about 5% in cash. And then that's shown over here on this pretty donut chart right there. So moving on to the portfolio value summary, you're always going to have 3 columns. So quarter to date, year to date, and then since inception. So this is going to be a specific date. This is your specific inception date. And so it goes back as far as you have the portfolio, and also individual accounts you'll see also have their own inception date. When the data started feeding over from the custodian, which is Schwab, to Black Diamond, which is this reporting software. Okay, so let's just use quarter to date as an example. So we have beginning value here. We have net additions. So any money that transferred in, any deposits you made, checks you wrote, and then subtracting any withdrawals from your account with that. So this is just money in, money out. And then net gain, or in this case, it's a loss. That's from the return of your portfolio, or market performance of your holdings that's driving if this number is up or down. And then we have the ending value. The return here is negative because this net gain here is negative. So this is your individual portfolio return over quarter to date, year to date, and then since your inception. So you can measure not just the dollar changes in the gains or loss, but also the percentage return as well. The one thing I will point out that I think is important to remember about the return is that it is a net return. So what that means is it's after all fees, after any underlying ETF or mutual fund expenses, any outside management fees that you pay for money managers that we use. And then it's also net of your True North fees and any custodian charges. So there's no fine print here. There's no, this is your return, and then, oh, by the way, it's a gross fee or a gross return, and your fees are, something crazy like 8% and you made no money. No, this is a net return. So it's a very accurate reflection of how your accounts are performing after all fees are considered. Okay. The next thing I want to talk about here is your class blended benchmark return. All of you should have this on your report right below your portfolio return right here. So if you get nothing else out of this video today, I hope you have an understanding for what the class blended benchmark return means, because it's not very intuitive. But it's pretty important to understand. So the purpose of it is to help you compare your portfolio to a relevant benchmark. And there are a number of ways to do this, but the challenge with a benchmarking your returns versus what they should be is, or the relevant benchmark is that your portfolio, the allocation, so in this case, it's 54% in equities or stocks, about 40% in fixed income, 5% in cash there. So there's no exact benchmark that we can compare your portfolio to. The only way we can do that is by assigning the relevant, these percentages and their benchmarks to a class blended benchmark. So a good way to think about this is if you have a car, right? Let's say you drive an SUV and you're going to take your SUV out on the track and see what it can do. Well, you're not going to compare your SUV to a Lamborghini or some sort of, Indy 500 race car. That's not a relevant comparison. You want to compare your SUV and how it performs on the track to other like-kind cars. So you're going to want to see how it does time-wise versus, other types of SUVs in that class. And that's exactly what the blended benchmark return does, because it looks at how you're invested and then it applies that to the relevant benchmark. So 54% of this portfolio's benchmark is in the S&P 500, which is the relevant equity benchmark. Then 39% of this portfolio benchmark is in fixed income, a little bit in alternatives, and then about 5% in cash. So it's always going to be a relevant comparison. The class blended benchmark return takes into account your exact allocation and applies a rate of return for the benchmark to that. The beauty of this benchmark return as well is that it is changing. It's actually changing every single day based on how your allocation is changing. So if you know, you make a big deposit to your account and that gets invested in stocks, that's going to completely change this allocation here. And so, but the benchmark return will adjust over time as your allocation changes. So if 10 years from now you're much more conservative, that benchmark return will adjust. So you can always go back quarter to date, year to date, since inception, and have a relevant like-kind comparison to your portfolio going back over all those time periods, even after all those changes you make to the portfolio. So I love this. I'm so glad that we're able to do this, because you're going to have this apples to apples comparison between your returns and the relevant like-kind benchmark over all going back for the entire history of your portfolio while it was here. So that's not something that we had access to prior, and it's a pretty neat enhancement there. Okay, so I know I've spent a lot of time talking about the class blended benchmark return, but it's for a good reason. Again, it's pretty important to just understand that, because it really is not intuitive at all. Then at the bottom here, we have your portfolio performance since inception. So this is going to go back, and we might have adjusted this year to date, but it either shows year to date or since inception right here. And you can see over here on the vertical axis, it's percentage wise, and then it goes back, and then on the bottom here, it shows what the time period is. So these little bars, it's your portfolio right here in blue versus your benchmark right here. So you can see sort of this is the short-term performance, how your portfolio did versus the benchmark on a graph over, this might be monthly, weekly, it depends on how far back this goes. So you can see that for each time period here. And then laid over that is the line graph that actually shows the cumulative performance of your portfolio here in the dark blue, and then the lighter color here is the class blended benchmark. So obviously we would love for your portfolio to do better than the benchmark, not just in these short-term time periods, but over time as well. So that's what this allows you to see, is kind of a graphical representation of the figures you see above. Okay, so moving on to the risk analysis page. This is a little bit granular. The next two pages are a bit more in depth, but we didn't want to just show you performance. Performance is always best understood in relation to the risk that your portfolio is taking as well. So that's why we included some of these risk metrics. And so for but it's okay if you're not interested in looking at this. There's some terminology, alpha, beta, standard deviation right here, and you may or may not have data in these categories right here based on how long your accounts have been around. But you should have figures for alpha, beta, standard deviation at this point in your report. For the engineers among you, you'll probably love this. For the rest of us, it might not be that relevant, and a lot of it's okay if you just skip over this, that's fine. But these are just measures of risk in your portfolio. For example, alpha is just what's the bang for your buck for the amount of risk that you're taking. What's your return? Are you getting a good return relative to the amount of risk you're taking? And then beta and standard deviations are similar measures of risk there. All right, next is up-down capture. And it's another measure of risk. So there wasn't enough data to show the chart up here, but again, you should have enough data where you have a chart showing up here. So let's just use quarter to date as an example. So we have your return, the benchmark return, and then the number of up periods, and then their number of down periods. So for example, if you have 1 week where your portfolio is up, another week where your portfolio is up, and then the week after that it's down, you have 2 up periods and 1 down period. So it just shows you how you're participating in that. So the upside capture is if the relevant benchmark goes up 10%, are you up 2%? Are you up 12%? How much are you participating in the upside? Versus the downside capture is when the benchmark goes down, how are you participating in that? If, for example, if the market goes down 30%, are you going down 40% or are you only going down 5%? So it helps you to see how your portfolio is performing in the inevitable market fluctuations and how those returns change over time. This next page of the report here is the account overview summary. So for the first time, you are seeing not just your entire household, but the individual accounts as well. So we have the ending value of the portfolio here, and then each individual account. We have the cost basis of the portfolio, and then we have the total RGL, which it stands for realized gain or loss. Total UGL stands for unrealized gain or loss. This number would normally have, you would definitely see figures here. UGL, or unrealized gain loss, is just taking the difference between your cost basis, what you paid for what you own today, and the ending value here. The RGL, realized gain loss, will reset every calendar year. And this is useful because when you have a taxable account and you want to see what the cumulative gains and losses are for the year, you'll see those update every quarter as things are bought, things are sold in your account. And then right here we have the year-to-date net gain for the entire portfolio, and then the return as well, not just for the portfolio, but for each individual account. And then over here on the far right side, we have the yield. So the yield is just the income figure of your portfolio. So it has nothing to do with the performance. It's just how much income is being generated in each of the accounts here. So a good way to think about this is if the yield is 2.5%, for every $100,000 that you have invested, you're going to make 2.5% that year just from the income. So for every $100,000, that's $2,500 in income. So you can kind of do the math that way. And it leads us to the next page here, which is the projected income. So in Anne's test portfolio here, we have the entire income for the next 12 months for each individual month. And then if you go all the way over to the right here, you see the projected income in summary for the entire household. Below that, you see what the breakdown is for the equity or the stock portion. So this is your dividend income. And then the fixed income down here is your income that you get from bonds and CDs. And then cash, hopefully you have some cash income from a money market down here, but poor Anne, she's not earning anything on her cash holdings. So the portfolio income, projected income for the entire year for Anne's portfolio is $492,000. Not too bad. If she just withdraws that amount from her portfolio, she's not going to be dipping into principal. She's just taking the income there, which is a pretty nice income stream for Anne. Then we have maturity distribution down here. So this is only going to show up on your report if you own individual bonds. What it shows here on the vertical axis is the dollar amount that is invested in each year. So Anne has bonds going out all the way to 2028, so it's only going to go out as far as you have bonds maturing. And then she has some gaps here. So you can just get a high-level feel for what bonds you own in what years, and how much in each of those years. Okay, so moving on to the next page. Now, the entire rest of this report is an individual account overview for each of the accounts. So if you look right here, you'll see the title of the account type. So this says Ann Smith, IRA, and then it has the last 4 digits of the account number. So whether it's a Schwab account or a 529 account, it's going to show up right here. And so each individual account, it has some similar information. You're going to see quarter to date figures, year to date, and then since inception. Each individual account is going to have its own donut chart for the allocation, and then its own, we're calculating the returns at the account level as well, and then also the class blended benchmark return applies for each individual account. The only difference between the account overview and the portfolio overview in what you're seeing in the format here is that we've included a couple of different charts down here at the bottom. So this first chart is showing, the mountain chart shows how the dollar value, you can see dollar values here on the vertical axis, how that is changing over this period of time. So this is year to date, and you can see that it drops and then it's back up and then it's down again. So this is just showing graphically what's going on with the dollar amount fluctuations in the account. Laid over that is this darker blue line, and what that is your net additions. So if this is flat, that means that you haven't added any money, you haven't subtracted any money from your portfolio over this time period. If you see it go up or down, that means that you've either added money or withdrawn money from your account. Now, the reason why we want to lay this over is because we want you to see the difference between how your account value is changing over time, what's driven by performance, and what's driven by the additions to the portfolio. So in this example, because there have been no withdrawals or additions to the portfolio, this change in account value over time is simply due to the return or the performance of the portfolio. And then this chart right here, we have account performance since inception. So it's going to look really similar to the mountain chart over here, except instead of a dollar value here, we have percentages on the vertical axis. And then it has the time period down here. So the class blended benchmark return, in this case, in this account, has done better than Ann's portfolio. So hopefully we're keeping pace or doing better than the benchmark there. And then the same exact layout for this next account here. So this account is a test account, and again, it has a different account number and different asset allocation, different benchmark, different looking charts because this account is invested differently. But it still gives you a nice overview of where you, where each of the accounts, what the balance is, how each of the accounts are performing right there. Okay, so that's pretty much it. The last page here is just the disclosure. So if you have any questions about your report, please give us a call. Please email us, let us know if you have any questions. But the goal is, you know, we want these to be relevant, meaningful, and useful to you. So hopefully they're an improvement over what we had available to prior. And if there is something that you want to see on your report that you don't see currently, you want more information, if you want a scaled down version, something that's a little bit more, you know, quick and dirty that you can look at, let us know. We're happy to customize the report for you to have it be something that's relevant and useful for you. So thanks for your time today. Thanks for watching, and I'll see you later.